Good morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for this Monday, April 2nd. Well, here we are starting a new week and a new month. We ended last month with the USDA reports, that being the prospective plantings in the quarterly stacks. That gave us a goose in prices, closing up pretty much well on the day across the board. That type of trade continued in the overnight session. We got wheat prices up around 4 cents in the soft red winter, up around 7 in the hard red winter. Spring wheat's up around 2. Corn's up around 3 cents. Beans up a dime. The meal market up $3. And the soybean oil up around 35 points. The stacks number was kind of on the high side for corn and beans versus what the trade was looking for and versus a year ago. The wheat stacks were smaller than a year ago and pretty much in line, but where the buying really came from and the interest by the trade was in the prospective plantings report. The beans came in below what the trade was looking for and versus a year ago. Some people were as high as maybe as 94 million acre of beans, and all we got was 88. And same thing with the corn, not that they were looking for a high corn number, but it was smaller than what the trade was looking for, and that's what really took the market off on the plus side on Thursday's trade. Wheat acreage came in a little bit stronger than what the trade was looking for, led by the spring wheat. So here we are on a rally from Thursday and Friday. We had our commitment of traders report that came out on Friday, and we found out that the trade was still sizably net long the beans and in the meal. They added to their short positions in the soft red winter wheat and in the soybean oil, but they did not have as big of a large net long position in the corn that we were estimating. Nonetheless, they still have a long position there. As we go forward in here now, we're kind of changing the wheels a little bit in here. We'll be kind of weaning ourselves off, but still important South American weather and their farmer sell rate and what type of demand we see from the loss of production in Argentina. But we'll also be putting more of a shift now that we are in April on what's going on in the U.S. as far as planting and crop progress goes. We do know that right now the weather isn't the best. It's still well early, but we're kind of soaking ourselves in down in the Delta. The western hard red winter wheat belt is still dry, and up here in the upper Midwest or in the Midwest it still stays somewhat cold, snowy, and wet. So the trade will be monitoring that as we go forward. Another thing that will be of interest this week is the rhetoric between China and the U.S. as far as tariffs go. That kind of increased a little bit over the weekend. China talking about how they're increasing their tariffs for pork from the U.S. and even throwing in ethanol imports in there as well. Trump's supposed to announce his tariffs for the Chinese this week, so that'll keep the trade a little bit nervous as well. So we're off to a firmer start. Had a lot of moving wheels out there. We'll see what the trade money wants to do to start off the day. I kind of think it's not going to be a runaway on the upside. We still have farmers selling. We still have the trade wars going on. We've got a slew of reports that are going to be coming out today as well. Weekly export inspections at 10 o'clock after the close, oilseed and corn crushings. And then we'll also get our initial crop progress and condition reports. So with all of that, kind of still think that $10 to $11 beans in the nearby for the marketplace in here, $3.50 to $4 corn, and for the wheat, see if we can hold up $4.50 to see what happens with the winter wheat crop going forward. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.